In recent times, there's been a growing focus on the state of the global real estate market, and it's got the attention of Jeremy Grantham, a billionaire investor with a track record of accurately foreseeing major financial challenges. As a co-founder and chief investment strategist of GMO, a financial firm managing an impressive sum of over $100 billion in assets, Grantham has gained renown for his successful predictions, notably foreseeing the burst of the tech bubble in the early 2000s and the widespread financial turmoil of 2007 to 2008. His ability to read the signs of economic trouble has made his opinions highly regarded. Now, Grantham is raising concerns about the current state of real estate markets globally, suggesting that the challenges they pose surpass those of previous financial bubbles. Grantham's perspective is not just based on speculation. His analysis stems from a profound understanding of economic patterns and historical financial crises. As the co-founder of a firm managing such substantial assets, his insights are grounded in a comprehensive grasp of market dynamics. His previous accurate predictions lend weight to his current warnings, indicating that the current situation in the real estate market is potentially more severe than what has been experienced before. The significance of Grantham's concern lies in the scale and scope of the current issues affecting real estate markets worldwide. The impact isn't confined to a specific region or country, it's a global challenge. Grantham's ability to contextualize the present situation within the broader historical context of financial bubbles underscores the gravity of the potential crisis. As someone with a keen eye for economic trends, Grantham's expression of concern carries weight, prompting a closer examination of the factors at play in the current real estate landscape. Grantham's apprehension about the global real estate market serves as a warning sign that demands attention. The combination of his financial expertise, successful past predictions, and the overarching global nature of the issue amplifies the significance of his message. Investors, analysts, and the public are now prompted to delve deeper into the intricacies of the real estate market, considering the potential implications of the challenges Grantham has highlighted. Grantham's emphasis on the global nature of the real estate bubble underscores the widespread and interconnected challenges facing housing markets worldwide. His observation centers on the remarkable surge in housing prices, reaching multiples of family income on a global scale. This phenomenon is not isolated to specific regions. It spans across continents, creating a concerning scenario where housing affordability has reached alarming levels. The scope of this issue extends from the bustling cities of China, such as Beijing and Shanghai, to prominent urban centers like Sydney, Adelaide, London, and Toronto, and beyond. The uniformity of this trend paints a picture of a collective challenge transcending geographical boundaries. The gravity of the situation becomes evident as Grantham highlights the house prices have escalated to multiples of what families earn, signaling a considerable imbalance in the housing market dynamics. The impact is particularly pronounced among young individuals who, in their pursuit of home ownership, are confronted with mounting difficulties. The soaring house prices present a significant hurdle, making it increasingly challenging for the younger demographic to step onto the property ladder. Grantham's choice of words, describing the situation as creating an unstable equilibrium, implies a delicate and precarious balance in the housing market. This instability arises from the mismatch between the soaring cost of homes and the financial capacity of the younger generation to afford them. Grantham identifies a pivotal factor intensifying the crisis as the significant surge in mortgage rates, escalating from 3 to 7. This abrupt increase in increase rates translates into a formidable financial challenge for individuals contemplating a move. The shift from lower to higher mortgage rates means that the cost of borrowing money to buy a home has substantially increased, making it financially burdensome for people to consider selling their homes and moving elsewhere. This financial strain prompts a collective reluctance among homeowners to put their properties on the market. As a result, there is a visible limitation on the housing supply. Fewer homes are available for sale. This scarcity in housing options sets the stage for a competitive environment, leading to bidding wars among the limited pool of individuals seeking to relocate. Grantham's assertion highlights the economic dynamics at play. With fewer houses available, the demand for those homes increases, causing intensified competition and driving up prices. Grantham further introduces the notion that real estate operates on a longer timeline. This means that the effects of changes in the housing market don't happen overnight. Instead, they unfold gradually over time. He articulates that prices in the real estate market rise when homes are within financial reach for a significant portion of the population. Conversely, when homes become financially unattainable for a substantial number of people, a decline in prices follows. This observation aligns with the concept that the real estate transactions involve substantial investments and typically require a more extended period for adjustments compared to other, more fluid markets. In order to convey the seriousness of the real estate situation, Grantham employs a straightforward yet powerful metric: the comparison between household income and average home prices. This metric serves as a gauge to assess the affordability of homes relative to people's earnings. Grantham's intention is to simplify a complex issue, making it accessible for a wider audience to comprehend. Using the relatable example of Jack and Jill, Grantham demonstrates how this metric works in practical terms by showcasing how the home price relates to the income of a typical household. He illustrates how this ratio is crucial in evaluating the state of the housing market. As this home price to income ratio rises, it serves as an indicator of the potential overvaluation within the housing market. In essence, when homes become disproportionately expensive compared to what people earn, it signals a red flag. The focus on the United States is particularly significant, as Grantham points out that the ratio in this country has climbed to unprecedented levels. This implies that currently, homes are reaching prices that are unusually high when compared to the average income of households. The mention of surpassing the levels observed before the 2008 financial crisis adds a layer of concern, drawing parallels to a period associated with severe economic challenges. Grantham expands the narrative, providing a broader perspective on the current state of the real estate market. He emphasizes that the global nature of the phenomenon distinguishes it from the historical localized bubbles. This global aspect is unique, indicating that the challenges in the real estate market are not confined to specific regions or countries but extend beyond borders. Grantham suggests that this distinctive global characteristic adds a layer of complexity to the situation, setting it apart from previous economic challenges. The acknowledgement of rising interest rates over the last 12 to 18 months introduces another crucial element in understanding the dynamics of the real estate market. Grantham underscores that these increasing interest rates have become a critical factor influencing housing affordability. This implies that as interest rates rise, the cost of borrowing for mortgages increases, further impacting the financial dynamics of real estate transactions. Grantham's insight sheds light on the intricate interplay between economic factors and their role in shaping the current challenges in the global housing market. The acknowledgement of the prolonged nature of real estate transactions adds depth to Grantham's analysis. Real estate transactions, unlike more immediate financial transactions, take a considerable amount of time, weeks or even months. This extended time frame contributes to a lag in adjusting housing prices to reflect changing economic conditions. Grantham's focus on this temporal aspect underlines the gradual nature of shifts in the real estate market, reinforcing the idea that adjustments unfold over an extended period. The conclusion of Grantham's message poses a critical question: when will the real estate bubble burst? This rhetorical query emphasizes the inevitability of a correction, signaling that the existing challenges in the real estate market are not sustainable in the long term. Grantham draws parallels with historical downturns in the real estate sector, suggesting that these corrections are not immediate but unfold gradually over the years. This historical context adds weight to this warning, implying that the current situation may follow a similar trajectory of slow adjustment and correction. At its core, the global real estate market stands at a pivotal moment characterized by a convergence of affordability hurdles, escalating interest rates, and an impending adjustment that looms on the horizon. Grantham's cautionary message functions as a rallying cry, urging stakeholders to recognize the urgency of the situation. The crux of his warning lies in the assertion that a recalibration is essential, signaling a need for either a reevaluation of housing prices or a moderation in interest rates. This recalibration is seen as the critical pathway to restoring global home affordability to levels that are economically sustainable. Grantham's insight encapsulates a sense of immediacy, prompting a collective response to address the challenges currently plaguing the real estate market on a global scale. If you found this video informative and insightful, don't forget to hit that like button and subscribe to our channel. Also, feel free to add your thoughts in the comments section below.